So, of course, raising 850 million rand, roughly $96 million. The FT blog calling it the first Springbok bond. And I suppose what really stands out about it is the fact that it's the first sovereign outside of South Africa that's using the JSE platform. Why did the Namibian government choose this as the next route when it comes to issuing international debt?
The sort of bonds of Africa are very popular at the moment, and I suppose they have a number of places that they can go to in terms of raising that capital. Can do it in the private market. Many of them that are doing it in dollar-based are going offshore to Irish Stock Exchange, London Stock Exchange, and Luxembourg. I think here in Johannesburg we have a lot to offer. Sort of feeding off the financial gateway or gateway into Africa concept. Certainly one thing we do have very strongly is a financial offering, so we consider this to be a very, very positive development. Something sort of broadly been working on for a number of years into Africa. So one of the advantages, of course, for Namibia is the peg to the rand, which makes raising capital in rands stable. For anybody else in the rest of Africa, raising rands has the cross-currency effect. So one thing we're working on potentially in the longer run is actually to allow African corporates, governments to raise in foreign currency based in Johannesburg. So that requires a bit of work at the policy level.
And just talking about this specific subscription, I mean, what was the investor appetite like? I know that it was 2 times oversubscribed. Who were the key investors prior to the listing?
Typically, it would be your pension funds are your biggest investors in this, and then all the foreigners who have been actively chasing South African bonds, for example, going into the Citibank World Government Bond Index. Those typical investors can range anywhere from central banks, pension funds, and even possibly some of the emerging market bond funds. They're all very hungry for yield. And the Africa bonds are certainly very popular at the moment, as you can see from the oversubscription.
When you're talking about bonds listed on the JSE in total sitting at 1.45 trillion rand, what is the makeup of those bonds right now? Still dominated by government sovereign bonds? What extent do the banks play a role here? And are you seeing a rise in corporate credit?
As it has been for some while. I mean, we've come down from sort of the 80% plus of South African government issuing down now to about 50, 55, 58%. It's a function of sort of markets evolving. The next most important after that historically has been the utilities and their state-owned enterprises, which has remained a very strong sector. Strong growth in the use by the banks of raising second-tier, first, second and third-tier capital in the bond market. So that's been a very strong growth over the last year as the banks look forward to Basel III next year, where they're going to have to raise their capital. The corporate bond sector has a lot of potential, particularly with some of the things that are going to change in the banking sector next year in terms of capital adequacy and their ability to lend longer term to corporates. So we've had a number of queries from corporates looking to raise capital in the public debt market. So we're very positive.
I suppose that, as you say, it's going to be a key driver going forward, those Basel III requirements and less bank appetite to lend. So they're going to have to come to the JSE. What about the issue of transparency that still dogs the bond market? Because many of them prefer to negotiate the price off markets. So of course, you posing that transparency is a good thing. It also helps increase trading activity. How are you doing on that front?
Well, I suppose it's a how long is a piece of string? Things start at the very simple end of the world. Government bonds are relatively liquid, and that's the end of the spectrum. We're focusing on working on transparency, and we're currently working with the industry and National Treasury in that space. As you go down the liquidity spectrum, it becomes more and more difficult to kind of put prices up into the public space where people are trading anonymously. So the less liquid the instrument, the more likely you to get a deal done by negotiating privately. So I would assume that a lot of the corporates, if they have a number of issues out there, they would be potentially trade more if we increase transparency. But it's a difficult subject. There's not necessarily a direct linkage between transparency and liquidity. It depends on what the instrument is and which end of the liquidity spectrum you're sitting at.
Graham, let's go back to the issue around African governments choosing the JSE as a platform to raise debt, because, I mean, we've seen a number of African countries go offshore, international markets, be it a euro bond, be it a dollar-denominated bond, to raise capital. I mean, what would the kind of JSE's unique selling proposition be to governments, apart from trying to take out that currency risk factor? Why would the JSE be a good platform for African countries to raise that debt?
I think a lot of the countries, corporates and governments, need to go offshore because there's just not enough capital in their local markets to be able to soak up the amount of issuance they need to get out there. So they need to go somewhere else, and the historical has been to go offshore. I think we present a very credible alternative, with the big difference at the moment that we currently can't list foreign currency debt. So I think one is that the infrastructure is in place. A lot of the rest of the world is already coming here to purchase South African government bonds, South African corporates, bank bonds. So it's a destination where the channels of investment are well established. They have their access channels through the brokers, through the banks, directly quoting, and that all ends up settling here in South Africa. So all those channels in place, and it makes it much easier to plug something new into it and have that distribution mechanism open up to this particular bond.